G'day everybody, this is Johnny Seville from Acorn Wealth Corp here, and this is your executive summary for stock setups for Friday. And yeah, really kind of turbulent near end to the week. As you can see, the S&P 500 currently, and now we went over this in trading room tonight, quite an extensive trading room, so I would highly recommend you looking at that. There was a lot of really good updates on pretty much everything we've been following, and we broke this down extensively. But basically, this is what we're looking at if we start with the really short term. What's going on short term? Firstly, on the hourly chart, we had this head and shoulders on the S&P 500. Okay, this is the SPY, which of course is the ETF for the S&P 500. So I'm using the SPY as our measurement. So you can see here we go up to the left, head, up to the right, breakdown. So the S&P or the SPY wants to go down to 286.50. You can see we rallied up nicely today off of the head and shoulder support, and that's what gave it that oscillating bounce. But I'd still be very careful about that, especially seeing as that is not a momentum bounce. It is oscillation, and oscillation typically, if we go and add in the there we go, the 9 there, and then we add the 20 simple. We can get a couple of those moving averages in. So you can see we've rallied up and hit that 9-hour moving average from underneath. So there's a possibility we could simply just turn around here and head straight back down towards 286.50. But even if we were to rally up, and we may rally all the way back up and test this kind of breakdown zone, that's possible too, where the 20-hour moving average is coming in and where the head and shoulder resistance is. So, but either way, even if we have a rally, we have the overall trend is a head and shoulders with further room to go. Of course, the other thing here is you've got a larger head and shoulders. Here's the left shoulder, here's the right shoulder, and so we've come down now. We're bouncing. So if we were to come up and create a bounce here. We've now finished off the right shoulder formation, and then that could drop. And if that were to occur, obviously we'd be looking at a breakdown all the way down to 281.50, right? So if you just can imagine a right shoulder being created and then a drop down. So even if we do rally up, I guess the problem is that we're still dealing with bearish patterns as far as it looks right now anyway. And of course, the head and shoulder being the number one most bearish reversal signal in a bull market. If we have a look then at the daily chart, you're going to see kind of this this panned out here over here on the right. So that's what I just drew out for you. Was that head and shoulder. Let me just move some of this away for the time being, so you can see how this all kind of pans out. So there's the head and shoulder I just drew on the hourly chart, that larger one. So the left shoulder up, bounce, create a right shoulder, break down. You can see that the target of that head and shoulder would be right down to this level, which makes sense because this is essentially where this upward channel you can see here, right? If we maybe draw some red, change that to the red color, you can see it a bit more clearly. So there's the upward channel that would bring us straight down to support. This would be the first, second, almost a third touch there. So this would be the third or fourth touch essentially on the upward channel support. And typically, after 3 touches, that's where it breaks down. So if we broke down, where does that take us to? So then we can measure out that level from the upward channel perspective. Okay, we can make that red as well, just so that lines up with the same color coding. All right, so there's your channel measurement, and then that would be basically bringing us down towards 270, which of course is where this previous bounce came from. So then we've got a next target there of 270 on the SPY. From there, what else is going on? Well, what we've also got happening, of course, is that could also then present itself. You can see these kind of bouncing that we've been going on. There's a lot of kind of very head and shoulder-ish type of action that's happening. So we could come down, bounce off the channel, rally up to the right, and then a breakdown below that would essentially be yet again another head and shoulder, right? So you're looking at all these time frames where potential head and shoulders could occur, and that would basically bring us down to around the same target as the channel. So, all right, so there's another bearish signal potentially to consider. And then overall, in terms of the macro pattern, you can see that we're in this this very large upward channel. Here was a low here, here was the low there, the high, the high. So in a very large scale, the worst case scenario is that overall we may be in a pretty bearish scenario when we look at that. Now, a drop below that bearish, if we drop below that channel, that would then bring us down all the way to around 230 on the SPY. Okay, so just to lay it out of what the risks are. Now, again, we may not break through that level. We may bounce off of it. That's something that we find that, all these things are things that will slowly unravel. But what we're doing here is we're preparing for what could come and recognizing, do we have more bullish factors or more bearish factors? And as you can see, there's quite a lot of bearish patterns and bearish factors that are facing the market. Now, stranger things have happened. We could rally away. But it's certainly a very high caution period of time. You can see that high yield bonds have been breaking down. Let's just go back to my normal template here on high yield bonds. So you can see the high yield bonds have been breaking down. These, as you can see, this looks like a head and shoulder, left, breakout, coming down to support. So this would favor the argument of a short-term rally, because as you can see, heading towards support, then rally up. So you can see that would favor what we've been talking about in terms of price action on the SPY, that it wants to rally maybe a little bit more of a drop, or possibly rally from here, but within a bearish pattern. And then as you can see, that overall, if we just move those lines out, you then have a left shoulder over here and a head on top, and that would also be very bearish for the market. So we're seeing a lot of similar patterns now, and that concerns me. Also, if we look at stocks above or below their moving average, as you can see now, we have been declining sharply since late May, or well, sorry, I should say mid-June. In the middle of June, 71% of stocks were above their 50-day moving average. As of a few days ago, it was at 40%. Today, it's at 36%. So for everyone saying, hey, is it time to start shorting stocks? Well, obviously, we've been picking strong shorts since this rolled over in June, because it's not the stock market that matters. It's the stocks in the market that matters. It's because, as we always say, it's not a stock market. It's a market of individual stocks. And as you can see, the majority of stocks in the market have been breaking down since June. So, and now we're going into these kind of all lower and lower levels. We're at support now, so again, we may have a little bit of a bounce there as well. So there's a few things technically lining up with how we could bounce tomorrow, but I just wouldn't want you to be hanging your hat on, oh gosh, maybe we're not in trouble but if the market does rally tomorrow. I think we would consider any rally as an opportunity to lock in profits on the longs, and possibly and position into short. So I think that we sell the rally at the moment versus look at it as a long opportunity. So I won't be looking to take any new longs other than what we've already in and already published. And again, protecting the profit, taking some profit on the way up, updating the stop loss, and letting them move. Now, of course, in terms of looking at the individual stocks, TZA as a hedge is doing really well. We suggested taking a look at that last week on Thursday, and you can see that's rallying nicely so far, holding above the moving averages. Money flow's gone positive. This is, of course, a triple short on the Russell, and that's looking great. I would look at a stop signal there, updating that to $8.23. So far, and in terms of where it could rally to, I'd be using this as a hedge. So I would just let it keep rallying and updating a stop loss behind it, because it's a hedge again, as a way to take part in the entire market drop if that occurs. Of course, the Russell 2000, as you can see, has been in an upward channel itself for a very, very long time, and this is what we were concerned about. That as eventually, again, an upward channel is bearish. So after it had touched once, twice, three times, it's touched now. That's warning that the channel is over, and it's rallied up and it's been rolling over ever since. And of course, that's why TZA looks so good. And if this does break down, you're basically looking at the Russell dropping all the way down to about 144. So, percentage-wise, from where we're currently at, that's another 12% that it could potentially drop. So, so TZA could have some really good moves if that were to occur. So there's TZA. I won't go over the existing shorts because we talked about them all in Trading Room. But and if you're looking, so if you're already invested in shorts and you've already filled your quota, great. But I'm going to go over some new potential setups now for people that maybe are still looking for new things, or just looking to learn from new ideas, or who are looking to, where other stocks might hit their targets, and you're looking for new ones. This is for you. So if you're already fully invested, don't worry, just ignore these. But Best Buy, of course, is looking good. This is another upward channel setup, and it's got insider selling. Smart money's moving out, and so this one looks good for a possible target of $72.13 is kind of where it's going to first hit support. So we wouldn't worry too much about that. We're going to be looking for the lower target of 58.33, which comes from the channel breakdown. So in terms of a potential stop signal on this one, we could look at a stop signal there at 78.13. Okay. So that will give it plenty of room to move. And again, from $73.15 right now. So that's only $5 stop loss. $5 stop loss for a potential drop of, what is that? 58, $15. So a 3-to-1 risk reward ratio roughly. So that looks good. You've got ALGN. ALGN is again an upward channel. Money flow going negatively. We've had 1, 2, 3 touches along support. We measure the channel breakdown from the widest point, and there you go. So that should be able to drop down to exactly where you can see the previous support. That's where the 200-day moving average is also. So if it breaks below 349.87, I'd be looking at a target of 305.33. I'd consider a stop loss of 372.53. So something for everybody here. A lot of these are optionable. So if you're an options trader, you could be. I look for options that are just slightly out of the money, like by maybe 1 or 2%, and ones that would be expiring in January or later. TRTN is another one. Again, potential short here. Another upward channel. We've had lots of touches along support. I'd be looking at a stop signal of 34.39, or you could wait for a higher probability entry where it's actually broken through the channel, which would be a break of $30.93. My target here would be $23.23. Once again, excellent insider selling. And if we're worried about the head and shoulders on the SPY, maybe that is the better move, is to wait for it to break down. But certainly, I know some people were saying they were already short this. I still like it. And as you can see, but there is that kind of support level that it needs to break at 31 to really get under the pressure. GRUB Hub. This one's I've been looking at this one as a short for a while. P/E ratio of over 130. Um, uh, it's got a beautiful setup here. Head and shoulders at the top. Money flows broken below zero. So again, another potential short. If this breaks below 128 and 47 cents, I'd consider a stop signal at 141.83, and that would be a momentum setup. So that should, in terms of where that could break down to, sky's the limit, or really the ground's the limit. But excuse me. But I would be subconsciously looking at a target of at least 106.33. Okay. Moving on. So again, and some of these, the reason why we like to publish a few ideas is some might trigger and some might not. You might have 8 ideas, but only 3 of them break down, and the others don't. So when we publish 8 trade ideas, it might not be that we're looking to buy or short all 8, because the idea here is to pre-program things. I like to pre-program my trades and say, right, I'm looking for 4 shorts. I want 4 shorts. So I found 8 stocks that all look good. So I'll go in and put them all into a one cancels all, like a basket order. So basically, as trades trigger, once I've got 4 stocks, cancel the other 4 orders out. So I don't really care which one triggers. It's whichever one triggers first. So you're trading the strategy, not trading the individual stocks. Really, we don't care what the ticker symbol is, and all of these pretty much look as good as each other. So you've got a nice way of becoming emotionless, so you don't get stuck on one idea. And just looking at this as I'm chatting away, as you can see, there's a nice little upward channel as well. So let's just reassess that target. So yeah, there we go. We'd be looking at potentially as low as 96. So that would be the second target. I'd be looking at 96.13. 96.33 actually, which is a $10 further basically than our first target. So there you go. There's GrubHub. Insider selling on this one as well. You got GMED, and look, you could stop there, but I'm going to give you a few more ideas. Because depending on what kind of patterns you trade, again, I'm trying to give something for everybody. GMED was a pennant, a wedge which broke out, faked out, and has now dropped back. Now, I don't like the fact it faked out, so I'd probably prefer the other setups, but GMED does have some really great insider selling as well. And if it breaks down through that wedge, the 200-day is right there. That's what I liked about it. So if this broke below, say, 49.87, or say 49.83, this could possibly drop all the way down to 41.55 or further. And I'd consider a stop signal there of 53.87. And as you can see, in all of these, I'm really wanting them to break down. So that way, it gives you insurance. Because if the market rallies tomorrow and continues to rally over the first few days of next week, I believe that'll be short-lived if that does happen. But if it does happen, it means that you're making sure these stocks actually do break through new levels of support, but they break down below those. So they're going to be under their own systems of pressure. So even if the market rallies, they're going to find it difficult to go back up, and that's why we're looking for that breakdown. That's why we publish a few ideas, because some might break, some might get carried with the market if a rally happened. So CMCO looks good. Again, so I'd make sure it had really kind of broken breaks below 37.39, or even, let's have a look here. Yeah, so 37.33. Give it a bit more room. Possible target here from the channel and head and shoulders breakdown down here towards 29.33, and I'd look at a stop signal of 39.93, which is above this level of support and this kind of moving averages that you can see there. Last couple, HMSY. Momentum potentially occurring here. You can see this rolling over after previously being held up by the moving averages. They're all crossing now. The 50 is just about to come up underneath it. So if this breaks down below $30.77, possible momentum target to at least 27.43. And look at a 25.33 as the second target, which you can see is that these two gaps. There was where it gapped up from. There was where it gapped up to, which are going to form support areas. Last two. JBL. JBL, Jabil circuit. Beautiful channel. Just broken down from that today. Money flows negative. Some great insider selling on this as well. And as you can see, a possible head and shoulders on the weekly chart. So this could drop all the way down to, so $17, for example. So I'd be looking at at least a drop down to 23.88. But I would say second target would be looking at, say, $17.57. And I consider a stop signal of 27.53. There's JBL. And although my girlfriend will hate me to say this, Michael Kors is looking like the cat's out of the bag, so to speak. You can see that it appears to be breaking down as well. And once more, like some of these other setups, you can see that the 200-day moving average is happening at the same time as that breakdown, which just gives you a nice extra bit of confidence. This is also the gap up support. So there's a few levels there. So if that breaks down below 65.83, kind of I'd even say a little bit lower than that, 65.43, just to give extra insurance. This could easily break down for a nice beginning of a momentum trade, starting with oscillation. And we'd be looking for a first target here of $58.23. But as we know, if the whole market breaks, that could continue much lower. Again, we'll look at the weekly chart, and as you can see, there's a 50-week moving average that it could break there, and then there's not much to hold it up. If that continues down, we could be getting into the 50s or lower. So, but I'd certainly maybe consider taking some profit around those areas. So, look, that's just. I mean, I could continue all night. Other ones you can check out. NOW looks great. That's an upward channel breaking down. TNET looks great. Breaking down into its upward channel. And also Wendy's. Wendy's looks great. There's a wedge. Again, this one looks awesome. If this breaks below 1681, yeah, I mean, there's basically that could drop all the way down to 1467. So, look, it's really, pick. These are all ideas that for you to consider. Pick what's right for you. Maybe none of them are right for you. Again, and I wouldn't go buying all of them or shorting all of them. You don't know. The market could rally. The key is making sure that you've got a nice balanced portfolio. And to me, that means having very high quality longs and very high quality shorts, so that regardless of the market's direction, you're really juicing that alpha. That you're making money from the strategy, trying to get away from market direction a little bit. So there you go, Wendy's, TNET, and now also all possible setups if you want to take a look at those. So again, something for everybody, all different types of patterns, different types of price ranges, optionable and less optionable. Look, have a great weekend. Stay safe and happy trading.